use it, right? So I predominantly trade gold. You get a 3 chart, right? Some people swear by gold. Other people that say gold is rubbish because of how it is moved, right? So the first thing with trading, anything I would say is understand how the market is moved, right? In terms of volatility. What is volatility? Volatility is how fast. Somebody saying something there? Can I type my question in the session? I would recommend that you ask because I would have to be back and forth looking at the chart, right? So better you just say, don't you have to be shy, right? You'll get your question out better and all too, right? So it's one love. So right. So volatility is how fast and how far this dotted line here does go, right? So that the first thing you have to determine or understand when it is on the charts and what, right? How fast or how far this dotted line goes. This dotted line here is called the price. The price of an underlying asset, commodity, or stock. What I mean by that? You see this 27.35 here? That is 2,735 US dollars for 1 troy ounce of gold, right? We're trading gold on top here. So this is the price of gold currently in the world, right? 24 karat gold, 1 ounce is 27.35 US, right? So this is the price of it. The prices keep fluctuating. These numbers in the back here is called pips, right? A pip is the smallest measurement of money that you could, but pips and pip, right, is the smallest measurement of money that you could use to determine the price of something. So you get paid per pip. Now, when we enter MetaTrader 4, MetaTrader 5, you will see something called a lot size. It'll be 0.01, 0.02, whatever. I did a class on that previously. That is just basically cents, right? So if you move the decimal place 1 point to the right, it will turn into cents. So if say 0.01 is just basically 10 cents every time this little line here moves 10 spaces, right? That's essentially that. Now, if you understand the volatility, right, meaning, well, how fast or how far this thing moves, then you would understand the type of market you're in. So, some markets just give you big candles like this, some markets just give you smaller candles like, so you have to be able to identify, how much movement or volatility the market have. The reason why that is important here is that you don't want to get caught up in one of these candles in the wrong direction, right? Because you're there. Now, I see the word candles. I expect everybody to know what a candle is, but in the event that you don't, right, these things that is formed on the screen here that just make trading complicated is called candlesticks, right? And they have different parts to them. And if you accurately understand how to use them or what they mean, then it will make trading a lot easier. So each one of these candles or these little bars on the screen here is like letters in the alphabet. Think about them like that. And together, they just form candlestick pattern. So three of these in a row and three by these in a row. Just make a candlestick pattern that is help determine certain movements in the market, whether the market going and buy or sell, right? So like little flags, so little indications of what will happen, right? So a 3 or 4 of these in a row will give you a chart pattern that will give you some kind of like a clue, like a little signal, right? And then enough chart patterns, candlestick patterns together will form a chart pattern that would then give you a major move in the market, right? But we will get to that. So this gray bar here, so on a regular forex screen, you see it red and green, right? I change the colors because it'll be a little easier on the heart now, right? I actually pick up that from, besides it looking nice, right? There's pick up that from Saddam. So psychologically, the big red candle does make you fearful, right? Somebody said, type of question again. Is there? Oh Lord, I come back in here. Sorry there. The cam. That's not. Maybe Have you seen the screen there? Have you seen it?
No, no.
I know that. Supposed to be good there now. Are they good there, right?
Yeah.
Right, nice.
Yeah.
Right. So if we could accurately understand what each one of these little things mean on a candle, it would make trading a lot easier, right? So you have to be normally when we trade, and we just go in with not enough information about our trade, right? So most times, and I know I start off doing it too, we don't like for the ones who are more advanced, we just trade support and resistance, right? But we don't look at the details and where the wicks really is. And you might see a 2 wick, and then you might just feel, well, hey, yeah, well, it might be going and buy, right? So you have to be a little bit more detailed about how you're trading, on, because like even like this candle, right? Yeah, for the more advanced people. So it start here, it finish here, right? But it open lower, right? But if you never look at how it open lower, then you could see this wick here and think, well, hey, the market go buy, right? But you could see the market open lower, now. So we get a lot of volume, although the market close on top, push this market down quick now, right? So these wicks here, right, is kind of so to identify them properly. So on this side here is where the market is open, right? So this is where you get your first trade. No, well, it could be on top here. My bad. As always mix them up. They could be on top here. Market open here. And then it close down here. So always mix them up. Right. Right. So we get the market to open here. So this is where the candle started. Right. So after this one closed, this candle started. And then we it makes a couple of moves. So it come down, it went up. The wick, I wonder if I can take out this. Right. No. Right. The wick, right? When the market open here, right? It push all the way down here and it push all the way up here. Right? So the top of this little wick thing here, most of them have them, is the highest point the market ever reached at any point in time during this candle. So on the top here, the top left hand side, different time frames, right? So each one of these candles would have been 50 minutes. If you switch it to 4 hours, each one will take 4 hours to finish, start and finish. If you it in 1 minute, each one will take 1 minute to start and finish, right? So these here would have taken, this one candle would have taken 50 minutes. And you can see how long again a candle have before it closed, right? It finished. So the market would have started here, and it would have reached all the way down here, it would have pushed all the way up here, however the direction that it went, right? Before it finally closed here. So the wick on top means how high the market ever reached, and the wick below means how low the market ever reached, period, right? So watching these candles, watching these wicks, you would see where the majority of volume went and where the majority of the volume stayed at the ending of each candle, right? So that's essentially how it is you're going to identify them. Dependent on how this candle open and close, depending where it happened, it can help determine what type of trade you're going to take or if you could enter the market or what. Right? So we will get into that a little bit more. Right? So now that we kind of understand how this market, how a candlestick does work, we can go into a little bit more of how a candlestick pattern is work. So we know that the market went up, we know it come down, and it cannot stay in this range, right? So if you push on, like we say to look at another one, right? We could see like this one here. This one like a little cross, right? This little guy here. So like we say, we could take them. Right, this little guy. This little guy here for 15 minutes. Right? 15 minutes, it went all the way up here, it went all the way down here, and it closed basically right where it started. So you can see that the buyers and the sellers had a hard time deciding where the market going. Right? So once the market buying, you will get big green candles going up, right? Like such. And once you have sellers in the market, you will get red candles with these gray candles coming down. The fact that this candle here, it didn't go up nor it go down, means that it's an indecision. Right? It is called a consolidation, or the market don't know what it wants to do, so it fighting them. Right? So this is one of the most powerful candlesticks that you could learn or understand on any market. Once you see these, something will not happen, right? But you have to know where it is forming. So a candle or a chart pattern like this, where you get a big green candle, you get one of these, and you get a red candle essentially, right? This candle here, because it shows indecision, or it also shows like weakness in the market, where the market don't want to continue. So you can see after we get a big green candle here with no wick on the bottom, so I mean the market never went down, it push up, and then you get one of these. So after this market push up, imagine this being all the buyers in here, and then nobody can buy again, and then the market sell. So this right here is a chart pattern, right? This is called uh, evening star chart pattern. Now, this will be kind of intermediate. I'm not expecting it to see this and memorize it, right? However, the reason I'm telling you this is so that if you could identify things like these in the market, you would be a lot more successful in trading. So, chart patterns, candlestick patterns is something that you have to learn, right? There's a guide. There is always form. The market will do nothing new necessarily, right? We always use past data, meaning what happened before will happen again, right? So you want to have a good grasp of these things. So I give you only homework, which is understanding candlestick and chart patterns. They will help you immensely. These things just always happen over and over again. And if you can identify them, it would make trading a lot easier. So right off the bat, you already see how much behind it is because you don't know none of these patterns by heart. You can't identify one if you see them happening in real time. Right? So that they would put in perspective how much more work you need to put into learning to trade, right? Is everybody they see the money and it is wanted, but it's a lot more difficult to get if it is you don't put in the amount of effort necessary to get them. So we understand the candles, we understand the chart patterns is a thing, right? How we just use these things together. Alright, so this here, this is our chart pattern, and head and shoulders pattern, right? So you need to be able to identify these things, right, to be a successful trader. This here is a reversal chart pattern. So a series of candlesticks together form and give you a chart pattern. Right? So there's a big head on top here, and there's a two square shoulders, right? Relatively equal highs. Chart pattern for reversal. Look at that. Right, right, you can enter trade and make some money on this side right here. Right? So you want to learn these things. So you can't obviously do all of them, right? But I urge you to study these things. There is the candlestick Bible I was sending back in your WhatsApp group, right? Now we understand candles, how they're working. We understand I want to do the candlestick patterns. The most important thing that everybody that's trade off of is support and resistance zones. Right? So there you go to a higher time frame. What are support and resistance zones, you may ask? Right? Support and resistance zones is basically the highest and lowest point the market ever reached before. Right? So we identify them relatively easy. So it will be the lowest point the market reached before getting a reaction. The reaction would be essentially turning around, and the highest point the market reached before it get a reaction and turning around. Right? This could be on any time frame whatsoever. It doesn't matter. Right? So marking up your zones successfully is one of the most important things, if not the most important thing that you could do in trading, arguably. Right? Everybody had their own things. Now, the lowest point in the market reached before it got a reaction, meaning the reaction is turning around, right? So let me try and understand that better. So the market buying all the time, right? It sell here, so we got a big red candle, and then it couldn't break this line. It went back up, right? Cool. So the market do something here. It do something at this price, right? Remember, each time this little thing here moves is a price. So the price will be around 2,700, right? I'll explain a little easier after when we push on. Right? It come back down and it reach the same price, and you see it going back up. Right? It going up again, it come back down at the same price. It turn around. So this is a support zone. This is like the floor. This is the foundation. The market, what we just call the market, the price, don't want to go lower than this. When it come up here, it reach up to this price, and then it couldn't break it. So it come back and it sell. Now it come back up here and do the same thing. It could break through. We don't know. But for right now, we're anticipating to do something at this price. So imagine the price like this, right? Use anything you want. Use the price of grapes, the price of tomatoes, the price of cars, the price of houses, whatever. Right? Let me go with them. Let me go with Almirah's. Now, I don't care how fresh your Almirah is. I'm not paying more than let me say 50,000 max. That's the freshest Almirah possible known to man in this current time. I'm not paying no more than $50,000 for your Almirah. On top here would be representing $50,000. So they get 50K here. Alright? This is the most you're getting for your al. $50,000. Don't care what you do to it, don't care how fresh it is. This is the market price. This screen what you need is called the market. This is the market price is what everybody who buying Almirah is willing to pay. Nobody willing to pay more than that. And below here will be represented of the lowest price you would ever take for your Almirah. I don't care what state my Almirah in. I don't want no more than no less than I say 10,000. I don't care if it's falling apart and it only has three wheels. I'm not taking it. I'm not selling it for less than $10,000. Right? So these lines are representing the highest point people willing to pay for something and the lowest point people willing to pay for something. So this is called resistance on top. So we could draw the line for that. For it out there. Right, so this is called resistance. Right, and this one on the bottom here is called support. Right, so the basis of any trading is support and resistance, identifying and understanding where these lines are. So you draw in your lines the closest or the highest point relative to where this dotted line is, which is your price. Right? So wherever your price is, you're looking for the lowest point that you get multiple touches essentially. And then you're looking for the highest point that you get multiple touches essentially. Right? That is where you're going to drop your support and resistance zones. Right? Highest and lowest relative to the price where you're getting the most touches. So let me say the market was somewhere down here right now. You will draw your support and resistance zones right about here. The reason being you draw it right about here is because this is where you get the most amount of touches. Now you could pull this line straight across the chart, quite back to whenever, right? And then you could also draw one somewhere here, right? So you could have multiple, right? But you're looking for the strongest ones. So you could draw one here, right? If you notice, same thing happen, right? It touch this line and it do something, it turn around. For the most part, every time it come up around this price, it do something. Some same thing here, come and do something, right? So this is the basis of where you're going to take your trades from, right? These support and resistance lines, and as I say, you could pull it straight across the chart here. And it doesn't matter. It does always do something around this price. Regardless, a good price for something is a good price for something. And a bad price for something is a bad price for something. Right? So we can escape that. That's just everything. So trading is just basically a visual representation of different prices of stuff. Right? Whether it be different currencies, that's different stocks, or whatever it is, it's just the visual representation of what happening with the price currently, right? Nice. So we understand that. So now that we understand that, what we just do by these zones here, how we just actually trade it and make money, right? So like with binary, um, some people, myself included, we just mark up these zones and we just wait for the price to come down here, and then they might take a buy because they're expecting it to go up, right? So the market come down, expecting it to go back up, I'll click buy, you go up, right? Or expecting it to sell because we're here, click sell, come down. Easy. Now, while we could do that, right? While we could do that and be successful, especially in forex, you will be limiting yourself for how much money you could make. Now, the reason why forex is make a lot of money is because it does get paid for these very small movements based on how much money you're risking. Also, they get paid for how far away from your entry the market go. So if I enter the trade quite down here and the market reach quite up here, I will get paid throughout this whole entire area. And if this buy forever, I would make money forever. Right? That is essentially how forex is work. So because you want the market to make a range, um, you will have to treat it a little bit different. So to identify where the market would go is you use a basic strategy, a strategy that I just use called break and retest, right? So this we don't mark up perfect here. This is a trade I actually would have taken, right? I don't think I entered. Yes, I would have been in this trade, I believe, right? Because I like get taken out up on top here. Yeah, I like enter the trade Monday night, right? Yourself and get taken out somewhere here. Anyhow, so the market come, right? So we had to understand how the markets work, right? So before we get into that, we have trending markets, meaning the market go in one direction like such, right? Yeah, trend line, right? So the market going up the road, right? We can easily identify that the market going up the road, right? Nice. Going up the road, so it's a trending market to the upside, the market buying, it moving one direction, right? So this is a trending market. These are the markets we're trying to trade. And now that trending market could go any direction, right? So now it is generally be overall direction, right? I screen stop sharing, you see.
We could.
But then I feel like there's a you thing, my brother. I think now you thing. Right. Moderator first in the screen, right?
Yeah. Yeah, you good?
Yeah, I see it.
Alright, bro.
Yeah.
I'm trying to refresh your page very bro, skipper, and see if I get you. Alright. So a trending market could also mean the market going down, right? I don't want to come off this page. But basically, so the whole thing buying, the whole thing could be selling like this. Right? This is a downward trend. Now overall, the market going up, right? But for the sake of example, this little area here, the market going down. So this whole market could be selling. So that is your trend. What you want to do is trade with the trend. The trend is your friend. Right? I didn't make up that. That is where everybody is in trading. It makes sense. The reason why you want to trade with the trend is like it's like trying to swim against the current. And it don't make sense swimming against the current. You go with the flow now, the path of least resistance. And next way to understand that is that if look how much green candles we have here. The majority of candles is big and green. It's going up. Right? So the majority of people or the sentiment is that we buying, everybody buying, right? For you now to try to come and sell in this market wouldn't make sense. Because the majority of people buying, you wouldn't go against the green, right? You would just make it harder. So you get a few little black candles, but that is small trades again, like small money making. If you even make it, you don't know how long you're gonna sell for. Right? So that is going against the grain. Or binary which get tricky. It's a short period of time you're looking to do that for. But like with forex, remember you want to catch all of this in forex. Right? If the market going up the road, you want to be taking one trade buys, right? Almost anywhere you take a buy from, you're going to end up going up the road. Almost anyway. If you close your eye and enter here, you might get a chop around here, but eventually you reach up here. You take a trade here, eventually reach up here. You take a trade here, you reach up here, right? So you go in with the market regardless of what happened. I do what everybody else doing, right? Cool. So to identify the perfect entry, this is strategy time, right? So this is more intermediate, times or the lucky here. It's real easy. This is exactly what it is, do. This is how simple it is. All you need to do is practice it, right? Break and retest. So we identify markets that going up the road. We know the markets going down the road. and then we just get the one or two guys who doing madness like this, right? So this is called consolidation, so choppy, right? This little area here with up and down, up and down, up and down, right? Up and down, up and down, up and down. So this is indecision. The market don't know where it want to go. We don't have no clear direction, right? It want to buy, it want to sell, it want to buy, it want to sell. So we don't know. So if you was to enter the trade here, right, we don't know what direction because this guy just come and sell off in the wap and you lost your money, right? So you don't know. So if you're seeing this happening, remember each candle is a letter, right? A few candles is a phrase, and then when you put them together, you get words and sentences, right? So this little area here made up of quite a few candles, right? So you want to what candles this is? Right, 108 candles. So you want to, you don't know, it's telling you what you're doing, right? The market's always telling you what you're doing. So I hear the other day, last week, I don't know if my partner on the call here, he was telling me, you waiting for the market to reach 2700, how they doing around, how they turn around everything or whatever, and I entered that trade somebody, and market buy hard, breakthrough your line, right? So the market is telling you what you're doing. You can't predict. And most people is try to predict. Now, trading is called speculation, right? So you kind of guess it, but you don't want to guess too much because you simply don't know, right? Trading and candlesticks is human fear and greed plotted on a chart. I would say it again. Trading is human fear and greed plotted on a chart. You're trading emotions here. Yes, you're trading what people think and what happening and right, but speculation is basically that. I think this would happen, right? So let me explain what human fear and greed plotted on a chart is. Now, when you're trading, two things has happened to you, right? After you do all the analysis, right? After you do everything here, and you enter your trade, two things has happened to you. Either you enter the trade and you're afraid to lose your money, or you enter the trade, you're winning, and you don't want to level the trade. You get greedy, or you win two, three trade, and you're still here because you want more because it comes easy. That's all it is. Your emotion drive. So after you do all the fancy analysis and you enter the trade, it don't matter. Once you enter, you can't touch it again. You have no control. So it's only your emotions about to limit at that point. Right? Anybody who enter, if you not trade for $1, emotions. Right? Everybody going through the same emotions you have. Right? So that is essentially what you're trading. So because human emotions is not a liquid thing, you can't really put your finger on how a man feeling. You can't predict what would happen. Right? Nobody don't know what will happen. Right? So what they need is indications or indicators of what the market going through. It will tell you. So, perfect example. So the market don't know what it want to do in this area here. Buying and selling, buying and selling, buying and selling. So because you don't know and the market confused, you confused too. So I staying out. The market then made a decision for you. Right? The decision that was made for you is that we go in and buy the market. The indicator of the market buying is this big green candle here. Right? Or the lucky, né? Lucky. This big green candle is called a bullish engulfing candle. Remember, you had to identify your candles, right? Now, a bullish engulfing candle, especially in the direction that the market is generally going, is the perfect indication of what you should do and the trade you should enter, where, when you trade it. Right? So, we're looking at these lines. Right? So all here we have consolidation, right? The market mixing, chopping around here, right? It's not breaking these zones. Remember, the highest price, the lowest price, the highest price, the lowest price, right? Ceiling, floor. Don't want to pass these two zones, right? It's not coming out of this little range here. And then all of a sudden, the market break out this range here. What? Big candle. Now, why this? Now, this could be a candle to the downside too, right? It don't matter, right? But why this candle is so important is because the amount of volume this candle would have taken to do this. Real people enter this trade for this to break through this. Imagine like a cover a hole in your ceiling, right? or you cuff a hole in your foundation, you cuff a hole in a wall. That is what this candle mean. So because it's same, but each candle is 50 minutes, this is what this candle. Let me say the start here. This is Tuesday, 20th October. This candle break out here on the 12th, Understand? And it take 10 days for this to happen here. This is 10 days with the data you see here for this to happen here. Right? So on this 10th day, real volume, real. So this is how you're looking at the market. I remember you're reading it, you're looking at it, you're trying to understand it. It will give you signs and hints and indications, right? So you have to understand what each one of the things is. You have to understand the wicks, you have to understand the bodies, you have to understand chart pattern, the candlesticks. So you have research to do, right? This candle here, bullish engulfing, it could also be a big black round red candle like this, bearish engulfing, it could also be that, that's fine. It could have breakthrough below, then be looking for sells, right? And it breakthrough here, cuff a hole in your wall. Wow! When you see this candle here, it is an indication that the market is going to continue in this direction. After 10 days, this candle could be $1 billion worth of data. Right? $1 billion could have gone into this candle. That is the big wheels, market movers, the banks, the hedge funds, the millionaires, billionaires. None of us on this call, even combined, could make one of these candles move. Right? We have no input. The men with money have the input that could make a candle move. They decide that this is where we go in and do we go in and buy more gold. Right? So the candle shoot up. When we see this now, it's like, yeah, but that's gonna happen. No. A lot of us, myself included, and not to the same degree anymore, but myself included, they share with FOMO. Now, some of us, sorry, may know what this candle means, and the first thing we will do is try and buy on this candle because we see it go, right? So we might be looking for buy because the market break through, but we will look to buy the market immediately. Now, we need more indication that the market would continue in that zone. So this is the strategy. The strategy break and retest of the support resistance line. So you want the market to break out like how it did, show us that we're looking for buys, and then you want the market to come back here to confirm that it don't want to go back down, and then we will look for buys. Right? Then we will look for buys on the market. So, I want no trouble. I get no trouble. Right. So the market buy, you want it to come back down, retest, and then continue up. Now, in this particular example, right, the market didn't retest. You, as a trader, would have gotten almost no entries on this. Right? Nah, I lied. This is 4 hour candle. Hey, let me stay here. It don't matter. And when the 4 hour chart, you as a trader, as a smart trader, wouldn't have entered yet. This trade, although it did buy, you will have missed this trade. Why? Because it didn't confirm that this resistance now is a strong zone, right? So previous support, current resistance, and what I mean by that. So we had the same issue down here, right? Where the market come, consolidate, break through here, right? It then came back and test the zone here. The test is it come back and it touch it. Let me see if it's strong or not. Right? So I break through. Let me see if it's strong. So I come back and I test here again now. We fighting. Right? I push here. Let me see if it go lash my back. And you come and you ain't lash my back here. You come, you ain't lash my back here again. Right? So I know that this zone is a strong zone. So only then will I be able to look for buys. So this was no resistance. Remember, resistance is on top. It break through, and then it now became support because now the market don't want to break back through. Right? So as you can see, after the market trend, right, all the way below here, once we break through this line, you see all here clean? See that nothing below here? Why? Because this line, this price is a strong price. I get it up here and I ain't taking no less than whatever price this is something anymore. Right? So that is how we go and confirm that this zone is strong. So if you mark up your support and resistance, this is forex you're doing, right? When you mark up your zones, right, and I want to binary man now. When you mark up your zones, bam bam, highest and lowest points, and the market, now we say consolidation, while you're not trading, is a good thing to be able to pick a direction in the market easily. Right? So if I come on the market and I see it consolidated and I mark my lines, I'm glad because clearly, for sure, I will know where the market is going to go. Right? So when it break, I know the market going to go up. You will wait for the confirmation that the market is here. So that is the first part of your strategy. And so I'm handling it to you. So the market break above a high or a low with a bullish engulfing, you can write it down. Bullish or bearish engulfing, you're waiting for the market to then come back, tap back into the zone, and then you look for your entries. So let me show you how that would work in practice. Right? So let me use the same two line we have here. So market come here. So you miss this trade, right? They should leave here. Yeah, you're looking for your entry and you ain't get it. Right? Not a problem. So the market directly up here. Directly up here. Directly up here. Alright, so the market. Alright, so let me use here as an example. This little area here. Alright. I want to use this one. But let me use this here as the example. And we reach here yet. How you going and take your trade? So now with trading, it always have a next trade, right? So we're looking at patience. So you're gonna take your time and enter in your trade and stuff. Right? So this little area here is a point of interest. Right? This is where you're going to look for your entry. This is the perfect entry here. Perfect entry. So let me break down what you as a trader would be looking for on this little area here to enter your trade. So you're monitoring the markets all the time, right? You have a resistance zone here, and you get bullish engulfing. So the market breakthrough. So remember, you be waiting. We're not rushing into any trades. It's so easy to lose your money, right? And a lot of people that want to win more than afraid to lose. And me personally, I have it in reverse, right? I hate to lose more than I want to win. So that's why I be more conservative with my money because it's so easy to lose, right? Um, and we working real hard. We don't have enough money that we need to survive, right? Why it is we would keep giving it away to these people. Every time you lost a trade, I'm man eating our food, right? Keep your money in your pocket. I don't have no work, right? So I afraid to lose my money, right? Man, we feel like a millionaire. I not working no way. I afraid to lose my money, right? Because I don't know where it will come from. So I protected my assets, my capital. I fight too hard to get my little crumbs. So I'm not giving it away. So I will wait for the perfect opportunity. If none is presented, I'm not taking no trade. Don't be thirsty to trade and rush on this thing. This thing is again say it will eat your food and it's very remorseless. And this thing will make you poor. It will make you worse off than you are. Right? Be aware of what trading is. It's not a get rich quick thing. It's not that you're gonna make a set of money. It will damage your life and your mental, right? Because since you start to trade, your psychology changes, you're thinking differently, right? And I know your pocket different. Because if you're trading profitably, chances are you might be named listening to me, right? You might be done line up your trade already, right? So we had to be patient and take your time, right? So that's the next thing we want to get into quickly before we finish off, right? I want to leave room for that part which was always preached and with any questions. So we get the bullish engulfing and we wait for the retest as a smart trader. So we get this. So then we move. Alright, I'm watching you. I'm watching you. I wait for you to retest. I don't care how long you take to come back here. So some of us, they were most of all of them in the group actually, right? The go trade I did take the other day, right? Where I pull out like four something, I 1 6 in your account. I wait 2 or 3 weeks for that trade, eh? I wait for the trade. Weeks. I ain't take no trade. No, I double the account. More than double the account on one trade. So it's like, yeah, boy, yeah, boy, yeah, boy. I wait weeks for that one trade. That is how patient you have to be. And I tell you, you have to wait weeks and months for a trade, right? But wait for the market to give you an opportunity. And we can't take opportunities out of this thing. It just give you a little blind. Every now and again, eat our food. When you get it, you snatch it. So what should we go in and take the trade here? So the market come, it buying, do get no FOMO. Do get no FOMO. Forget about that. Right? I'm waiting for that retouch. If it don't give me the retouch, I don't want the trade. For the people who trade and buy any with me in the morning, or they will know how I trade. If I don't get what I want, I don't want it. And I only trade it with my rigid set of rules, which you all should have. A rigid set of rules, whether it be how much you're winning and losing, whether it be how you enter in your trade, because everybody would see the market differently, right? You don't have one set way of trading. It's intrinsic learning. So you go catch your own little formula, right? But the basis is always the same. So we come now and we get a retouch of the market, right? So the market buy all the way up here, right? You might have get your FOMO, but you're waiting for your candle to close, right? So you come, the market come and it close down here, right? The powerful candle that I told you about in the very beginning, your little doji, you see this little guy form. Ooh. And this little guy form at a key level. A key level is your support and resistance, right? That is your ceiling and a roof, right? A key level, let's call it. So the market buy, well, that's what that might have been news or something, right? But the market buy, get on while, it make you feel like there's something happening, nothing happening. And come and they get this little candle. So this is a little chart pattern right here, right? Evening star. So you come, boom, you can identify a pattern, market come, touch it, right? And then it don't have no more volume to even continue going down. So it touch it, you might like the line hot. Touch it, can't make, go on back up, right? And then this candle come and I didn't even want to go down there. Because he now tell me down there hot. Make a little doji candle. This is a sign of reversal. So if you can identify your chart patterns, your candlestick patterns, you identify your support and resistance zone. So remember, you're watching a zone, you're watching a straight since you line up this. Since you put this here, you're looking for something to happen between the two ranges, and you're looking for either the market to sell below your range here, right? You're looking for your market to sell below your range. You're looking for one of these below here, or you're looking for that month up, right? Now, before I continue, when you get bullish engulfing or bearish engulfing above the zone, you want to close higher, right? If it wicked and come back down and close below, then that's a false breakout to get there, and that's where the patience is. So you want it to close above. So you're waiting for it to close. If it close above, that means holy strength, and holy strength. If it wicked through and it come back down, then false breakout there. Sometimes it come out and it dip back in. I'm sure a lot of people experience that. And the market dip below your entry, reach for it below your zone, and then like here, and they get a false breakout. Market is breaking it now. But when you in the trade, you think in the market going and go up, okay, break the line, right? That way you're waiting for it to retest it. It break the line and it come back in one time. So when you enter for a buy here, the market come and sell and take you out now. And so that's why you want to make sure it retests the zone. Like remember, when you're in this trade here, you all you see is this candle. This is hindsight. And when you hear it, all you see it. So you had all your blank that never happened. So you had to wait now. Right? So no FOMO. FOMO will eat your food for certain. So you come now, market come, touch it, it understand your chart patterns. And then here is where you will enter the trade. Now we don't have no perfect entry. Right? Sometimes you get a good one, sometimes you get a bad one. With practice, you will get better at taking entries. Right? You enter your trade here. Now I just like to put my stop loss about so because of practice, I develop a tighter way to enter the market. Right? So I don't have to risk a lot of money. That's why sometimes I over leverage a little bit. So, and that's eventually the big money you'll be seeing men getting. And they just be men over leveraging and thing and growing account. Because you're confident now. If you're frightened in a trade, that mean if you're frightened with the trade, I mean you're not confident, you're trading properly if you're bummy. So you have to be able to be brave when you're going in trade. Yes, when you get brave when your skill come in now, you're confident in your skill, then you could jam it now. So until you're confident in your skill, then you'll be all a little bummy, but I mean, if you don't understand what I'm trying to say. Only then should you could take more risk and over leverage a little bit and try and flip accounts. But when you've been in the beginning and you're a little bummy, you ain't too sure what you're doing. You want take your time now. So you come everything line up for the year. I did like the part about that 20 pips up loss. Nothing too big. right? But really and truly, you're supposed to put your stop loss below the last low, right? So really, it's supposed to target like here and now, right? And then you push your stop loss about like a 2 to 1, and so this is really the trade you're supposed to look for, right? Something like this. I just go 2 to 1, right? Now as I get a little better, I just hold my trades them and let them run as winners, right? But before you know, when I was a peanut, right, a potato, I can hold more than two, so I take in 2 to 1. 2 to 1 very easy to get, and in terms of if you get this line, I'm good for you here, you will get 2 to 1 minimum. You know what I'm saying? Even if it turn around on here, you will get 2 to 1. You know? So and in the beginning, you're looking for 2 to 1 risk to reward, right? So that means every one trade you win, you get two times your money, and then when you lose one, you lose it one. So you're always in profit by a little bit, and as you get better, you hold it, you trade a bit longer, you get a little runners on them, you catch them however long, right? But don't look at main results now. Don't look at main 5 years, and try and do it now, right? So you're leaving all here as risk. Remember, you're risking properly, yeah? So your lot size low. So you're leaving lot size low. Remember, put trading percentages of your money, right? So you're not getting all that big money one time. You don't have no certain money to invest in the first place. So you have to be patient with yourself. Right, so your lot size little low. That's to be able to give you the proper risk. This could be at $10 you're risking here. This could be at $20 based on your lot size now. Right? Most times we just over leverage. So when you tell me if you put your stop loss here, you're frightened. Your account will blow if it is you don't get it straight. Right? You don't want to put that pressure on yourself now. Once you have this skill, you'll be able to deposit small money and grow. And if until you could do that, then you're not ready. So take your time and build slowly. And ideally, you want to grow the account so you could only be trading with profit, their money now. And so you don't want to keep funding out of your pocket. That's not the goal. You want to deposit once, you want to just keep flipping them money they over and over. So if you put 100, you put 1,000, right? You could lose 999. I only risk $100. I cool, right? You will feel it, but I cool. I ain't really lost nothing now. So you set your stop loss below the last low, somewhere down here, right? You go to 2 to 1 and you sit down and you hold this trade. This is the perfect trade here. You break through your entry, your resistance or support, you wait for the retest, and then you take the market up the road. Right? You look for 2 to 1. Right? And that is basically your strategy there. Right? Break and retest. That is the strategy that I illustrate. This is all I illustrate on forex. I don't have no other deviations. Right? Nothing else I just do. This is it. Right? Because it's clean to see. Right? You have a rigid set of rules to follow, and then you have a set risk to reward. And as you see, it's a nice little food, and as the skill grow, you just and your money grow, you risk a little bit more, and the same 2 to 1 go pay. Right? You can maybe run it up here to wherever. As you're holding your trade, they got 2 point something risk to reward. So if you get, let me say you got 3 to 1, I would just say, right? You got 3 to 1, boom. You could lose 3 trades in a row and still break even. That what forex is allow you to do now. And then you can keep doing the same thing over and over. So you come back here and you do the exact same thing. Look at that me again. Right? So you identify a trend in market, you have a consolidation, market come, give you a bullish engulfing, breakthrough. Alright, we wait. Right? You might have wait what? A day, right? Because one candle is 4 hours. Right? So you wait after this candle form like 4 hours, and then take the 4 hours for this one to come, and then this one close the next 4 hours. Right? So you wait a day for your entry, no scene. But imagine how much money you make. And you come, you enter your trade right here. Right, somewhere here, you're trying to enter. You don't get the perfect entry every time, but come here and you get easy 2 to 1. Easy 2 to 1. And that is a trading strategy. That is it. And they keep doing the same thing. Huh?
You can get break and retest without a bearish or bullish engulfing.
No. That is the indication to enter a trade. So if you don't get it, you don't take it. So you need to see this. You need to get this. That's the first lineup. So your first line up is the resistance. First line, like your first indicator. So you notice I don't have any indicators on my screen, right? Pure support and resistance and price action. Price action is just basically reading the candles. So I will study these candles, make my resistance and support lines, and that's all I need. So you come, make sure you see a bullish or bearish. That is your second indicator after your resistance zone, right? And then your third one would be the close above that zone. So you're looking for rejection above that zone. So remember the market went down here and it couldn't stay below. So you're looking for rejection of that zone, and then you enter your trade. You look for 2 to 1, or if you know you're higher, your little belly or whatever, you frame. I used to enter on 5 minutes and stuff. I do not do it. I don't recommend none of you do it. Yeah, let's get a lot of false signals and them lower time frames, boy. Right? So you're analyzing the zones like I am on the 4 hour, and then you can look for your entries on the 15 minute. You will get a sharper entry now. And the price is respecting higher time frames. And so you see how much I really catch here. And then zoom it out, at least a 15-minute time frame, man. And they see how much I really catch. Right? So when you get your this is what I was saying, you don't have no perfect entry now. Right? So when you come now and you enter your trade, I remember there's your immediate if you're looking at it. Right? So when you enter the trade and you get this, boom, it break through the close above, push up again. Now they 50 minutes are kind of like real trade you're watching here. You come, you might see it touch here. You might enter here, You could even enter aggressively on this candle here, because sometimes it always come down and be clean. You might aggressively enter, right? But essentially, what you want is just for this zone to hold now, right? So all here you could be flipping around. All here you could be flipping around. You might even close the trade here, and I want the one. You double your money. I will take that, right? This is why this little area here is a false breakout. That is where you want to make sure it closes in any particular direction and then. And eventually you get up the road now. Right? So that's why the higher time frames is recommended to take your trades off of it. It's get a more accurate reading of where the market going. So in the 4 hour, you see how much cleaner it is. And you could do the same thing here. You could have a trade. Well, if we're done running, that's our next. We could do that next day, and which is let's say they buy the dip now. So buying the dip is basically you get a trending market like this. You can see the market going up. You trust that it will continue going up. After the market is always go up and down, up and down, up and down. So you come and you can draw like we say a resistance zone. And this is our next little thing, I just add in now. And so when the market break, you come and you get a retest here, you could enter here. So all the market, if you miss all of this here, right, and you come and you get this resistance zone, and you break through later on, you come and you get the touch here, you get multiple touches, you could enter here. And you get next bullish engulfing right here. This here is a bullish engulfing. And you could ride the wave here. So all them is little entry points you could take, coming along now. If you could drag this out almost indefinitely, as I say. And look how perfectly line up for the most part. Right? So you could have come, this could be a little entry point for you here, but here would be an entry point to go up, and here would be an entry point again. So you have many little opportunities to get trades now. Anybody have any questions?
I am Google parts on how to enter only 50 minutes because of Wi-Fi. But I feel like that's the only thing I don't understand. I know to mark up on the 4 1 thing, but when you have to go down to a lower time frame for entry, that is why it's get higher.
Right. So you're looking for the same thing you now see on the 4 hour. So your 4 hour zone is gonna be your major zones, right? So that's a major support and resistance. So the price does respect the higher time frames more, right? So when you're making the zones on the 4 hour time frame, right? So that's the zones that will really be respected. Because inside all of these little areas, you have plenty of little zones. If you're going to go to the 1 minute, right? 1,000 little zones. Right? To get a proper entry. I know you can take it through the 4, I know it's fine, right? But to get a proper entry, a sharper entry, a cleaner entry, a quicker entry, you come down to the 15-minute time frame. And essentially, you're looking for the exact same thing you're looking on the forward, you're looking for on the forward time frame, right? Which is, right, which is you're looking for the market to break a major level resistance or support. You're waiting for it to come back in, touch the line, close above the line. Even better if you get things like dojis on that level. And get one of these at a key level is one of the most powerful things they could get. Right? So that may do have no more energy now to continue to go down or whatever. Right? So it's weak. So you come, you get a touch, tap in, it close above your zone. So even if it breaks through, don't wait, let it break through, let the candle finish. Wait for it to close. That's something we don't do. Right? Wait for the candle to close, see you all run out, and you can put on your bar close on somebody's side here, I think is this here, and count on the bar close. You'll see how much more time in the candle you have. Wait for it to close, like tell you we do it. And then when you get the rejection, then you can enter, right? So you don't have no perfect entry. Sometimes you get a little drawdown, sometimes you don't get no drawdown. But essentially, if your analysis is good, even if you get a little drawdown, you would go in the action, right? So you just hold on to your trade. You should be able to take the loss if you go and get a loss. Right? Now you know you're risking properly. If your account can't handle the loss, right? If you can't enter 100 losing trades, then you're over leveraging essentially, or 52%. Right? If it is it you can take all them losses in a row, then you over leveraging. If after you take 2 3 trades your account dead, you you fight on yourself. You want to be able to stay in the game as long as possible because you go in and lose that trade. Right? It's inevitable. Nobody could always lose. Go always win. And anybody in the world tell you they could always win a trade, they lie. You had to run from that man. And so even when you do lose, which you're guaranteed to do, sure about that, you can always win. Yeah, on forex. So you could lose one and you win and still make money. And so the entry on the 50-minute is the exact same thing. Higher key levels that you mark up, wait for it to break above that key level, wait for it to come back into that key level and close above. So it come and close above here, push up, it come back down. So you might enter here, right? And you might go up in profit, you might feel like a wizard, and then you come back down and then back to entry. Remember you take no of that drawdown yet, you think that's low. But even if it's low, and you're risking properly, you just close your eye when you bet holy trade. And if you lost, you lost. You have a next one. And so even if I flippy flop, I could never take that for myself. Right? I couldn't accept seeing profits and then coming out at profits. But you just have to endure that sometimes, or like apartheid. Right? So you get your bullish engulfing or bearish, come back, tap your same level at no break. Right? Once you get close above, ideally you get more than one close above, you enter the trade, which could be anywhere around here. Even if you enter the trade here, boy, even if you get this entry, it don't matter. Right? Even if you put your stop loss below here and you go to a 2 to 1, it don't matter. Right? Even if this was your entry, right? You still win the trade and you get no drawdown. You follow? Even if, bro, you enter the trade up here, you get a bad entry though. You still win the trade. You might have get a little drawdown. Right? But it's fine. Right? Okay, you still have all that here terrorists, still thinking. Yeah, so you understand what we're on now, boy. Right? So you're just looking for these key things on any time frame, it don't matter. And okay, you could get same trade like this on a 5 minute chart or 1 minute, It's just more likely to hit your stop loss more often because all of this happening here instead of maybe one or two little forward candle. Right? So that is it. Questions again?
How does it determine I take profit?
2 to 1 to start. It's the easiest to get. So let's start with a 2 to 1. Once everything line up for you, and like we say, you get like this bullish engulfing and whatever. Once you like you get that, right, and like you get your retest into the zone, the easiest thing to get that 2 to 1. Once that line up for you and you're correct in the analysis, you're going to get a 2-to-1 easy. Don't care where you get the signals from now. You'll get a 2-to-1. So 2-to-1 to start, and as the skill build and you get more comfortable and you understand the markets better, you will just keep tightening up your stop loss. So you let the trade run. So like that why they do the last week or whatever. Enter the trade and just keep tightening up your stop loss and just ride the wave indefinitely. And when it come on and hit it, hit it. Right? So you might get that trade all up here. Okay, remember if you enter down here, right? This would not affect you. Right? You're holding on to that trade. Right? Because you would have put your a resistance here. Right? The way you break through from, you know? So that would not affect you and you just hold that trade. Right? Or you might have you might have tighten up your stop loss to um well you get bullish engulfing here. So you might have put your stop loss like here. Uh, you might have get take out, you might have get take out here. Fine. Because I sure get take out here. It's cool. Every time the market dip on here, you just move your stop loss a little bit. And they come. I think I did they catch me here, you know. I think they would have catch me on the Monday, you know. Yeah. And but I did enter some quiet down here, so by that time me care. and I re-enter. I think down here I re-enter and I actually close the trade up here. Somebody say something. Appreciate the simplified session. Yeah man. Enough love. I just consider myself I don't mean always. I just explain things for me. um, Anybody else? Anything else that they want to find out?
Yeah, this goes for forex only or Binance.
So
Maybe Binance binary.
so this particular strategy is for forex. This one in particular. Binary a little bit different. Could I touch on that very briefly? Ideally, bro, you on the sessions and all right. So binary a little bit different in terms of what we just look for, right? It's more look for reversals. So what you know how it is analyze charts on binary. So what you would do is be keen on when I explain it now. And as I explain, all the trades are taken and all the trades will be live now. Ideally with binary is you're using the same support and resistance zones, right? But instead of it breaking to continue going further, you want it to reverse. So in binary, and when we know we're coming down here, remember the markers react to these zones now. So what you want is the little reaction on the zone now. And so this would actually be a binary trade I would take. So on a high time period, it is a 50-minute low. I would wait for the market to come down, and I would go down to like a 1 minute, and just look for when it touch the line, and just take a trade for like 5 minutes, and win that trade, right? Because what we expecting is the same market, it don't matter, right? We're expecting it to make some kind of reaction, even if it was a small reaction, binary, you know, like how it is found is work now. It's a small movement, so you're looking. That's like ultimate scalping, right? So you're just waiting for the reaction of it. It's a little bit more tricky because of time based on your one time. You need perfect entries. With forex, you can play it a little bit more loose, and with binaries, you want perfect entries. It's a little bit trickier, right? But what binary does offer is instant percentages on your money. So with forex now, you will have to wait for a trade and let it run and endure all of this, but you would ultimately make more money. You would just hold that trade longer. And with binary, I could get up to 92% of my money in one trade. So whatever I put in there, I flip that one time. Well, and because the time frames usually are smaller and more liquid, this move more, it faster. The fine trades now. So the binary is more. You come in, you look for something, you snatch up 2, 3 trade quick, and you go about today. And forex now is where you would sit down like the big boy. So binary little cousin and like the big brother. You come and sit down and you analyze and you extract as much as they could out of this market. So this particular strategy here is for forex. Binary, you would just have to just pay attention to what is doing these sessions on our daily. You will get through that. I the only person I am who I ever really meet locally that is big money on binary. I mean, let's fight on binary, but and I don't think is I don't think is really really the trade, the strategy itself. I think the psychology behind binary works now because of how easy it is to enter that trade and how fast it is. You can make money. It is right up a lot of emotion. Now remember, trading is kind of
You
gambling.
know, I realize like
I listen to you. Alright. So yeah, so binary does there's right up emotions a lot more. Alright, so you have to be careful, and it is good for forex too. But if you never, if you do conquer yourself, right, and defeat that greed and that fear and thing, you will always lose now. So I don't care how good of a trader is in terms of skill. If you do develop the mindset, you will never really make it now because you could be winning and some. I almost sure. I almost sure. The majority of you all um are profitable traders. I mean, have the potential to be, right? I believe the majority of you have the skill. I don't think that they don't have the skill. And I believe or they're not conquered or their mindset. So while they may be winning, you're not staying in the game long enough. So you're greedy. So you want to keep winning. And then it is eventually one bad trade, okay, and then you can't stop. You can't come off the market in a loss. I know it's the hardest thing to do in the world. And come off that market when you're lost. But if you don't, then you will lose all the money one day. So it's better you just chuck it in a roulette to play with if that's what you're going to do. And so I think most of you all could trade, I don't think they can. Sometimes I call in trade and analyzing the market good. It's just that you can't discipline yourself to take a loss. Or when you win, you're not satisfied with what you get. And it is high in a loop now. Right? So if you could conquer that, I think it would be a lot better off in terms of trading. And next thing that a lot of people let's do is they just want the money, boy. And I understand we trading for money, but you would I just keep preaching it, but I know other know, but other just don't do it, boy. You will never get the money, right? If you don't learn this skill, you'll always be subjected to somebody trading for you, or somebody you gotta get somebody some money, or you want bot, or you want this. You ain't gonna get it. You understand? Yeah, let's sit down and learn, and I was like, it's like what 1 or 2% that traders ever become profitable, right? And it's just these simple rules, man. That's to defeat yourself, right? It's just you versus you on here. When you come on your sit down here, you are alone dealing with that. So if you can battle yourself and win, then you're well on your way. Because all it does take is being able to stay in the game long enough, right? If you can get in more wins than losses, you get to go. But you just have to be able to have money for tomorrow, to lose all today, and that is what we just be in a loop now, right? You just losing, and you're trying to just get up that big win now, right? But you're paying $20 in your account. Or when it's $1 trillion industry, you're 20 and doing nothing. It's sad to see, right? But instead of just paying us at 20 and chucking and hoping they make that big money, which you're never going to do, and you're not going to get it because it will happen. Some of you here, I hear now, we never get it, right? So at which point you will learn? Doing the same thing over and over, expecting a different result is the definition of insanity, and you're insane. Take your time, do something new, actually try and study. And I am. Some of you will know again, 18 hours a day for a year straight, I is beyond this thing. Sometimes 3 o'clock in the morning, I send a video with me up doing this. You know what I mean? So if you put like obviously I can't do that, but if it is you could put more effort into learning the skill, which it is a skill, then you'll be able to sit down anywhere with any amount of money and do this thing. And so you had to want it bad. And you can't want what men have and then you're not doing what people do and they get it. But it's really not hard. It's not rocket science, it's very easy. The hardest thing to conquer is yourself. And once you defeat yourself, it's game over now, boy. Yeah? Anybody else have anything?
Yeah, Malo, one thing.
Mm-hmm.
I know you were saying before the OTC when we doing binary,
Mm-hmm.
don't trade the OTC or don't select the OTC. You want to explain that OTC a little bit?
Yeah, so OTC stands for over the counter. It is a simulated market. So the all banks is closed the same time, right? Because they're using the same financial markets that we utilize in here, right? So the live market, which is where everybody is showing all banks in the world, in Scotiabank, FCB, Republic, IBC, all of them trading on the same markets that we utilizing. Every trader in the world could watch the same thing that all they're watching right now on the charts, right? So this nobody could manipulate this. What happened in here happened in here, right? We can't essentially thief on this, right? It's transparent for the whole world to see. What OTC is, because the market is closing in night time, well, not really night, it's closed on a weekend and stuff, especially, and some markets is closed, the slow down. Okay, when the bank closes, the market is kind of closed, right? So in the evening, it is slow down and whatever. What the brokers do, because they know it's a gambler, they want to click that button, they will give you a market that they could trade on in the night. But what them doing is them issuing that market to you. So they have full control. So essentially that market is unregulated. Plain talk bad manners, they can thief you. So you can be trading good and they would just make you lose. And but on this here, if you lose, you lose. Everybody could see you lose and everybody could see why. And there you could be correct and they would just rob you. And I will tell you how I know that with 1,000% surety. Right? And you fairly new to the group and everything, right? It would have some members here who would have been here a little while. And I had a binary bot, right, that used to give binary signals. So they say on a morning you come and I take in trades that used to send signals, right? Whole day, whole night, right? That is sending signals. And some of them used to win, right? Now, here what I noticed um, from using that binary, well, and I know that there's TIFIA for sure. And without a doubt, the bot could trade all pairs, all time frames at the exact same time, right? So I could send 1,000 signals to you one time. Remember, it's an algorithm, right? Now, certain pairs you should just pay. So you go buy a roulette machine and it just pay. So you think you're good, but you're not good. The market paid you, hooking you, right? And then other pairs just not paid. Remember, I could sit down and watch this data, so I get data and mass abundance. Remember, you're not trading 10 or 15 different pairs different times at the same time. So you would know, you might just think, hey, but I can get through this trade. But while I sit down here watching it from that level where they bought this pumping out trades, certain pairs it just do pay. So you could pull them pairs and other pairs be more profitable. So there's have times where you might land on a pair and the pair pay. That don't mean you good. The pair pay now today. And then they might land on the next pair and you're trading well. And then the pair that's not paying you. So you're losing your money regardless. And remember when you lost them win. So they're essentially eating your food now. So I don't trade OTC at all, at all, at all. I don't touch it. I don't recommend anybody to touch it. If you want weekend, you have a little extra money and you feeling ten, you want to check out dollar, 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 and you just need to, it's fine, cool. Right? But if you're going on do any kind of real trading, don't even bother with it. Discipline yourself and stick to the live market now. And over a long period of time, OTC go eat your food. They just rob you essentially. And next thing I know, when I see it, I check the opening and closing price of something on TradingView, on MetaTrader, and on Pocket Options. But I don't. Well, I used to love them, but them. But yeah, I check the opening and closing prices, and Cotex and TradingView, Cotex TradingView and MetaTrader had the same price, and Pocket Option had a different price. Exact same trade. So all them little things now, you know. So I remember in trading, everything start against you. So it's designed for you to lose. And so what you want to do is try to get as much things as you could use on your side to win. And some of the things is obviously the technical analysis that we now went through is the fundamental analysis, meaning why the thing is move. So that's why I only trade gold because I understand what is make gold move. And I don't trade any other pairs like that because I don't understand why things just happen, right? So you want to understand why the currency just moves, so the fundamentals, which is arguably more important, but it's more complicated to learn, more economics. The technicals, as I say, which we now learn how to draw your zones properly, risk management is what will keep you in the game fighting if it is in winning, yeah. And well, your own patience and discipline to take a loss when it is a loser because you're going to, and when to just be satisfied when you do win and know when to come on the market. So once you can get those things, everything you get all them levels up to like a level 5, level 6, then your chakra high and you make money now. Right? If it is, you're off balance and some of them levels still on 2, 1 or 3, you're going and you're going to eat your food because them playing on 10, right? True. Right? So it does want to develop them little skills and you get you. So any little edge now, OTC is not an edge. So you don't trade it. Lower time frame is not an edge. You don't trade it. Friday evening is not an edge. Don't trade it. Sometime Monday morning is not an edge. You don't trade it. So it does knock out all the little things that could work against you and just stick purely to what could work for you and just jam them few little things. And you don't need plenty pairs to trade. You don't need no thousand strategy. People let's make it with this new strategy. You don't need none of them things. 1 or 2 pairs, one strategy, and you eat off of that one thing. Like we trading binary with me, I do the same thing every day. We no lose. Same thing over and over every single day. And with enough consistency, you have a higher win rate, you make money. Yeah? Anybody else?
Me again.
Yeah.
I remember on one of your chats before, you said you look for 5 things when you're trading out. 5 things must be present before you're playing a trade. What was those 5 things?
That was so binary, I remember you're talking about. So I could share that quickly. If we would load. Right. So, the 5 things that I look for before I enter one trade on binary, right? So I use but for I use no indicators. Binary I just kind of use indicators, right? So the 2 indicators I just use is the RSI standard settings and the zigzag standard settings, right? So I don't change anything to apply them to the chart. Now the 5 things. One, the price must be coming to, but I'll stay on this pair because everything else is, I want to load up too much other things. But I change this wallpaper, I'll just playing around with them. Yeah. Yeah. So the 5 things that I look for, I could get a good little zone to show it would be nice. This pair is rubbish. One a good pair. So that look good. Actually, go and try and took me a chop up. I watch it on chat and I get Rex. Is that right?
I ain't gonna lie, you see them big engulfing candles in binary, that was the use.
If you go in the wrong direction, if you get in your direction, you score. I looking for a good chat to show this thing. I had you one of them patch up chat. But I like binary, but I can say what I want. I make good money on binary,
Yeah, we actually know, but my problem is I like binary OTC. So,
Now, well,
that kind of love.
boy, why do you like OTC so much, boy? Why? Why?
But the time that Sunday morning on OTC, I log on with 40 in my account, and when I log off, I had one like 60 in my account. Sunday morning on a so I had a lovely trip, but then again, it is Christmas on that.
Sometime, all the time, overall, not making no money though. The money I make is the money I get back with a loss a little bit. But making,
I cheap.
you gotta make more and you're putting in there. You know. Why I can't this thing fight him down. Anyhow, I see where like a 15 minute mega man, but alright, there you go with this yet. Right. So the five things that I look for is oh my goodness. If pressure in the eye and I word. Alright, good. So let me pretend all of this here do exist. Right? This is not here. So the five things that I would look for is one, the market to come to a high time frame. So the high time frame, right? Good. So you see how on the forward time frame this is resistance, yeah? Support, sorry. Right? So this is support. You can consider the support that works here doing something. Right? We doing this one loose, right? But other than that, kind of thing. So on a high time frame is resistance or support. So that is the first indicator, right? Now, what the market to be coming to approach a high time frame, the 50 on the forward, ideally both, right? Indicator one. Two, I want the zigzag to be connected to the price that I'm looking at. So when it's coming on here, you see like how the market is right here, and the zigzag not attached to it. The zigzag does indicate support and resistance zones clearly, right? So there's always line. If I put a line anywhere on there, it'll always get support and resistance, right? So I want the market to be coming and approaching the key level on the zigzag to be connected to it. A indicator two. I want the RSI to be either low or high when I'm looking for that buy or sell. So how the market come down to this key level here, I want the RSI to also be coming somewhere down here. That is number three. Right? Where's the next one by? I would like to see the market weakening coming down the road. Right? So I would be waiting for it to come down. So ideally you're looking for little rejections like this and thing, right? So looking for that. That would be like number four. And last but not least, well, last but and least kind of, we can already take on this because I them indicator here, right? I want to see the market in the same color of what I'm looking for. So I'm looking for sells. I want this to be big and steady. And if the market buy, I'm looking for a buy. I want this to be green, buy. Right? So right now it states an 80% sentiment that the market would sell. And if I'm looking for a buy, I don't want to see this. And I'm looking for this to be green. So that is the things that is lined up, right? So when I take a trade on binary, before I just enter the trade, I watch all them things, right? So if all them things line up, I'll take it. There's have times where I might get 4 or 5, I might take it for a lower percentage, right? If I trade by myself and I trade in small, I might take it on three, right? Because I know I have multiple entries, right? I did dollar jam, I will take a few entries and run on the trade, right? But ideally, how I trade in high risk, every 10%. I want all five to line up. So that's why I find I would only take one trade on a session because I want all them things to line up, and the patient. So the 10% is a cool thing I like to try, right? Percentage as opposed to putting money in there, right? Yeah, when it is actually seeing money and it's like a growth too now, right? But you have to be disciplined and take your time with that. So 91 trade. So that's the things that I look for to line up. If all those things line up at the same time, then I would enter the trade. Have our next meeting there when half an hour over. Last question. Nobody? Alright, we'll go take it. Um, well, thanks for coming out. Nice too. Now I appreciate being here and so on and so forth. For those who want the compounding, I will see you later tomorrow. We have some stuff coming out soon enough in terms of the direction we're giving the group in terms of programs and things. We're kind of working hard at this one. So this one is according to the last will and testament of what I'm going to do. After that, I ain't fighting up with no program. Then again, who ain't learn by now, then No, but they got to face it out there. I got I ain't right to the flag yet. Take a little vacation. So,
Yeah.
I don't know later.